I expected treasuries to be doing really well, right? The safe haven play, but the 10-year yield is actually unchanged. It's at 3.97. The 30-year is up 2 basis points at 4.65, and even the short-term, the short-term rates. Let's say the 2-year note is up 2 basis points at 2.40. So much for the safe haven flow. Well, I think this neocon blunder could be the trigger for dollar hyperinflation. Yes, and not just the dollar, of course, but fiat currency hyperinflation. And what do I mean by the neocon blunder? Well, the attack on Iran, and that's what we're going to look at today. And we're going to stick purely to the economic, financial, and monetary side, because that's what we do here. I could go into the rabbit hole, but that's not the purpose of our channel here. There's a lot of other channels that are covering things. Before we do, though, I'm going to recommend a couple of books that I have recommended in the past. And if you want to look at other books that I have recommended, I have a playlist which I'll put here. It's called Book Recommendations, loads of videos about different books. But one that I wanted to recommend now, especially because of what I see happening in the world, is Fiat Money Inflation in France, How It Came, What It Brought, and How It Ended by Andrew Dixon White. It's about revolutionary France in the 1790s and how their experiment with paper money failed epically, and it led to the Napoleonic Wars, of course. Yeah, really good book. And it's one of the books that really made me realize what kind of road we're going into already more than 20 years ago with our fiat currency system. The other one is one that Jonathan Newman from the Mises Institute recommended the other day. I interviewed him. I really recommend you watch that interview I did with him, mostly about the Federal Reserve, and I'll put it up here. Yeah, and this is the book, What Has Government Done to Our Money, right, by Murray Rothbard. This is a very good book because you don't have to be an economist, you don't have to be a PhD student or anything. Anyone can read this book, and it's a book that they won't teach you in school or at university, and it simplifies everything about the nature of money, gold, and silver. So highly recommend it. The other thing I would say this morning, as I speak here, it's 7:37 a.m. London time. Let's go and look where gold and silver are, right? Because it's to do with gold and silver what I wanted to tell you. Well, right now, gold is up $130 at 54.07. High overnight has been 54.20. Maybe some people thought the markets would be a lot higher, especially gold and silver. But I think there must be a lot of intervention there by the plunge protection team or the President's Working Group on Financial Markets. I suspect really when the market opens for real later on this afternoon London time, morning New York, we could see gold and silver go even higher, and we could see the stock market actually drop even more than it's dropping right now. What about for silver? Well, silver is at just below 96 at 95.80. High overnight has been 96.50, so it's up about 2.2%. So no limit up or no huge move. And as I said, I think yeah, they're kind of controlling things for now. I'm not sure they'll be able to do it when everyone comes into the market, U.S. investors and European investors. I see that silver in China is trading like $114. So this price on COMEX and in the over-the-counter FX LBMA market is still fictional, in my opinion. And it's getting harder and harder for us retail guys to get gold and silver. Why do I say that? Well, I'm looking at a couple of big bullion dealers here in the UK that have an online presence. And Atkinson's, for example, says, due to the volatility in the market, we cannot take your order at this time. Please check back soon, right? There's no volatility today. It's just going up. It's not really going up and down. So I wonder why they don't want to service people right now. Same thing for Bullion by Post, who are supposedly one of the biggest. Trading of gold products suspended until markets open on Monday, 9 a.m. London time. While the only one that seems to be up and running is my affiliate, Gold Investments. So we have a new promotion there, a 1% off. Various dates, Britannia's gold, 1 ounce gold Britannia's. What that means is any coin prior to 2026, 1 ounce gold Britannia, you get a 1% off the listed price. You have to use my promo code for that. It's in the description. So back to the hyperinflation. Why? I think this neocon blunder could backfire. And I said I don't want to go too much into the rabbit hole about what's happening politically, geopolitically, who's behind what. But from listening to a lot of very good analysts on YouTube, people like Scott Ritter, who warned the UN and the world that Saddam Hussein didn't have weapons of mass destruction. He was the UN weapons inspector at the time. He's warning now that this operation against Iran could already be over and lost. And why does he say that? Well, because the neocons probably convinced President Trump, unfortunately, that it would be really easy to just go in there, surgically take out the leaders of Iran, the Ayatollah, which they have, and then they could change the regime, and everything's fine. But according to Scott Ritter, by killing Khamenei, that's the worst thing that the Americans could have done, because he's become a martyr, and that's going to rally the Iranians, not only the Iranians, but all the other Shia Muslims around the world against the United States. I didn't realize the Ayatollah was the leader for the whole Shia community around the world. He's kind of like the Pope of the Shia Muslims. I think there are 173 million. It's a small faction of all Muslims, but I think even other Muslims are not going to be happy. So a can of worms has been open, and according to people like Scott Ritter and other former U.S. military men, former intelligence people, the U.S. has given itself 4 days to get this done. So they started Saturday, so that's 1 day, Sunday. So we are just starting the 3rd day. So let's say, tomorrow, Tuesday, will be the 4th day. So by Wednesday, if things haven't improved, and I do agree that the first victim of war is the truth. So we don't really know what we've been told by both sides, or all 3 sides. There's 3 sides in this, right? Is true or not. But I think the longer this goes, the worse it's going to be, unfortunately, for America. And I don't say this with glee, because I don't think Americans or anyone who lives in Iran or Israel, average normal people, deserve this. Unfortunately, this is something that's been pushed by, people high up, right, that we can't really control, but it's going to affect us. And I've spoken many times over the last 10 years plus on this channel about the symptoms of hyperinflation, and it's the reason why I recommend this book. There's another one as well, When Money Dies by Adam Ferguson. I haven't recommended that today, but you might as well read it too. And the symptoms are many. People don't realize that hyperinflation is got nothing to do with your normal inflation, which is really when you create a lot of money and credit and it results into higher prices or higher CPI. No, this is more than just that. Yes, that helps things evolve into hyperinflation, but the scary and final part of hyperinflation is when the public loses faith and confidence in the state that issues the currency. And I see a lot of unhappiness about what's been done, unhappiness towards President Trump, and I'm not here to slag anyone off. I'm not an American. I'm very neutral in terms of politics, but I think even hardcore MAGA people are very unhappy. Even Alex Jones, who's lately been very gung-ho and very pro what Trump has been pushing, he's kind of like doing a 180, especially after what's going on here vis-a-vis Iran. And yes, it's opened a can of worms. And also, I see Martin Armstrong has warned about this. He's warned that this could trigger the collapse of the fiat currency system, and his cycle system, Socrates. They predict the denouement, or the end, to be 2032. So I still think there is time to get out of fiat currency if you have big balances in fiat currencies. What about the stock market? Is that going to crack? Is there going to be a crack up boom? I'm not too sure. I mean, anything can happen. The Fed and the Treasury and other central banks could step in and use this crisis as an excuse to print even more, and then we could see the stock market go back up. But we would see gold and silver go up even more. We would see hard assets go up even more. So I think we are on the cusp of this hyperinflation. And I've warned, of course, with this comparison here, the chart of the Reichsmark back in the early 20s. And the price of gold really started taking off in the summer of 1922. And the price of gold started taking off really in our day and age last year, or more precisely like 2024, when we broke 2,700, as you can see on this chart. And I think, we're well along the way to hyperinflation. Will it be as bad as the German one? Maybe not. We're probably not going to get into the quadrillions of dollars per troy ounce. Things will have already collapsed if that happens. I think what we might see is very high, in the 20s, 30,000s in gold. I'm not saying it's going to happen this year. It could be in the next 18 months or so. Silver, triple digit silver is already a reality. I mean, if you look at SD Bullion, one of the big online bullion dealers in the US, well, Silver Eagles are trading at $108. So double digit silver is not a thing anymore. Only on Crimex, right? and the LBMA, which are basically bucket shops. Bucket shops are just betting markets where, you know, the trading of the real thing doesn't happen that often, or doesn't really happen. The stock market, well, right now, the Dow is down 700 points, or 1.5%, the Dow futures. S&P futures is down 1.4%, almost 100 points. And the NASDAQ 100 is down 1.7%, 430 points. Yeah, and one thing that's quite surprising, I expected treasuries to be doing really well, right? The safe haven play, but the 10-year yield is actually unchanged. It's at 3.97. The 30-year is up 2 basis points at 4.65, and even the short-term rates, let's say the 2-year note, is up 2 basis points at 2.40. So much for the safe haven flows. What about the price of oil? And that's very important as well. Well, let's have a look. Brent crude traded up to 82 overnight. Right now it's trading at 79.50. It's up 9%, or $6.60. West Texas, or WTI crude, is at 72.60. The high overnight has been 75. It's up 8.4%. And I think that could take off even more, in my opinion, as well. And copper as well is up slightly here, 0.2%. Natural gas, that's the other commodity, if you want to call it, that's affected by the war in the Middle East, in the Persian Gulf. Well, that's up almost 5%. So how does hyperinflation look like? Well, having lived in Brazil when we had hyperinflation in the late 70s, early mid 80s, what it looks like is that price of basic necessities, they keep going up very quickly. I know that's not happening quite yet, but I think it will come. And the longer this conflict drags on, and you hear a lot that the Iranians want to talk, President Trump said that, but I've heard that they don't want to talk, and I've heard as well from the foreign minister of Oman, who was mediating the negotiations prior to the attack on Saturday, that the Iranians had agreed to the nuclear deal, and they're ready to sit at the table and hammer the deal. But then, you know, they started attacking Iran. So I think negotiations or deals now are out the window, because Iran, they've tried several times to do that in the last year or so, and every time they've been attacked. So they've got nothing to lose. Am I defending Iran? No, I'm just observing from afar what's going on. So yeah, I think things are going to get worse. And I think right now the markets are actually being kept under control with that exchange stabilization fund. But once the regular market comes online, I think things could accentuate even more. And by that I mean they could go even further in the direction that we're going now. For gold and silver, that would be higher, of course. For the stock market, it would be lower. For the currencies, actually, they're going down against the dollar. Don't be fooled by that. The dollar is not strong. You need to look at the dollar versus gold. And the dollar is down 2.4% versus gold. The dollar is only up about 1% versus the other fiat currencies. You need to keep an eye on the gold and silver price, not the fiat FX rates. So with that, I'm going to wish you all a very good day. And yeah, so take care. Bye.